Hey guys, what is up? Welcome back to my Robinhood portfolio. Hope you guys are having an awesome Saturday. What I kind of wanted to talk about today was oil energy stocks. As you know, I've been developing a high dividend yielding portfolio. I've been trying to diversify. And so far, I've only bought one stock for my energy section of my diversified portfolio. Exxonmobil. I bought 5 shares of that about 2 weeks ago. But what I wanted to take a look at today is some other candidates that could potentially add to my portfolio. As you know, OPEC over the last couple of weeks or so has kind of gotten together and formed a tentative agreement about limiting oil production. As you know, OPEC, the cartel, what some would consider an illegal monopoly over oil production, essentially stands for Organization of the Petroleum Exporting Countries. OPEC is its acronym. As they've come together and sort of come to this agreement limiting oil production on a pure basis of supply and demand, oil prices are likely going to go up. And because of that, the companies that are engaged in oil and gas production, well, essentially oil production, will go up as well. We've kind of seen that in some of the energy stocks. I bought Exxonmobil, like I said, about 2 weeks ago. And you can see here a nice little inflection here from about 83 or so up to 86. And for me, that represented about a $20.45 increase. But I think this is going to continue to move forward in an upward fashion, just because the oil prices really haven't gone up after that announcement. After the initial announcement, like I said, some of these stocks went up initially a bit here. Let's go back to ExxonMobil just to kind of demonstrate this. There we are, ExxonMobil. You can see about 2 weeks ago or so, it spiked up on that announcement of OPEC, but really, oil production it really hasn't been limited at this point. So once that limit starts taking place, the forces of supply and demand will dictate that the price of oil goes up, and with that oil price going up, the stocks involved in the oil production and production of petroleum products will go up. So let's kind of take a look at some of those today. I've selected a few candidates that I'm thinking about possibly adding, not only adding to my ExxonMobil stock. Let's kind of go back to review that real quick here. So ExxonMobil is currently at 86.74. Like I said, it's went up the past couple of weeks or so. I've gained about 20 and 45. But the nice part about this stock is it's got a nice dividend yield there at 3.459%. Good PE ratio. So I've already added this stock to my portfolio. I've gotten 5 shares so far. I will probably be adding to that in the near future here. But let's take a look at the other stocks I'm also potentially adding to my portfolio here. The second one here, this is also a large producer of oil and petroleum products, Chevron Corporation. You can see on the bottom here, integrated energy company, yada yada yada. Basically, it's a petroleum producing company. Great dividend yield, 4.185%. Doesn't have a PE ratio there, which is kind of concerning. Typically, if there's a negative PE ratio, it'll be not available in the Robinhood app. But you can see they're a large market cap of 193 billion. So I think this is a stock that would be a safe buy with regards to the OPEC limiting production and oil prices increasing. And like ExxonMobil, kind of a little bit of a jump here from about 99 or so up to 101, 102. So this would be a good stock to add to the portfolio moving forward. Third stock here, there's a couple different options for this particular stock. RDS, A and B, Royal Dutch Shell. So again, a large company engaged in essentially production of oil, also natural gas and some other energy commodities. But awesome dividend yield, 7.325%. Large market cap, 111 billion. And this stock, if I remember correctly as well, actually this stock didn't jump up as much as I thought, but it did jump up a bit here. From about 47, 48-ish up to the 51, 53 range here. It's kind of been holding steady over the last day and week. It's been slowly trending up here, a little bit of volatility. But again, this would be an awesome stock to have. This is the other version of it, B here as well. It's essentially the same sort of trending here. Same dividend yield, about 7% or so. So those three are very serious contenders to add to the portfolio. I do want to mention a couple other stocks here. Imperial Oil, this is another stock engaged in oil production. A little bit lower dividend yield. You can see that PE ratio is off the chart at 120. A little bit smaller company, 27.28 billion for its market cap. But this would be another company I would potentially be adding to the portfolio. It's performed very nicely over the last month or so, going from about 30-ish, 29-ish to 32. So very, very good returns on that particular company. I kind of wanted to point out a couple other stocks here, and these would be stocks to kind of avoid moving forward. I mean, these have enticing dividend yields, but I don't think these are going to be companies that you would want to invest in. So I just kind of want to point some of these out here. So the first one goes by ARC. There we go, ARC. It's 350. Is this the stock I want? I don't believe it is. Let's go back here. Actually, let's go for another stock. It's not really popping up here in Robinhood. I'm not sure if they don't have that available or not. Here we go, Seal Drill Partners. You can see here, this is a company. It's trading very, very cheaply here, about $3 or so. It's got a very high dividend yield, 11.8%. But this is really a company that I would avoid. This company is involved in offshore drilling rigs. But the problem with a lot of these companies is that they're essentially giving back very high dividend yields to keep their stock price up. If this dividend yield was not at 11.8%, as you can see here, this price here would probably be a penny stock, to be quite honest. And because of that large dividend yield, the price is supported at a price point that it can't be maintained there. They'll either have to cut that dividend or essentially decrease their stock price. So this would be a stock that I would definitely not take a look at. It's got a great dividend yield, but again, I probably wouldn't be too keen on putting that in my portfolio. Another one here, FRO. Let's see if this one is listed on. Yeah, here we go, Frontline. Another company sort of engaged in the oil industry. This is a tanker company, so this would be more in transport rather than production. As you can see, there's a nice dividend yield, 10.6%. But again, this stock trades a little bit more cheaply. You can see over the last 1 and 5 years, it's essentially done nothing. You know, negative 62%, negative 47%. And this company as well has a large dividend payment at 10.6%. So again, that stock price is propped it up by that. And that's just not maintained over the long haul, that 10.63%. And typically these are companies that have absurdly high yields because they're essentially on the way out of the company, basically they're going to be bankrupt. So they have a market capitalization that's much greater than their total assets, more than what they're able to produce in profit. So I don't think these would be great investments. Very enticing dividend yields, but not great investments. So again, I think the three companies that I'm taking a look at, which I think you should also consider adding to your portfolio, would be the XOM, Exxonmobil, a very good company. It would be what's the stock symbol again? CVX. Chevron Corporation, a very good company as well, and then RDS as well. Royal Dutch Shell. So those are the three companies I'm going to be taking a look at like I said, adding to my portfolio. I only have one energy stock, XOM. I'm going to add either Royal Dutch or Chevron. I think I'm probably going to be adding Chevron. I'm going to wait until, like I said, the election cycle's done. The rate hike has already been implemented to kind of see what the market's going to do overall. But probably going to add Chevron actually. But Royal Dutch is also a very good candidate. And then also adding to Exxonmobil would be the other option. So again, just kind of wanted to talk about some energy stocks I'm taking a look at, give you guys an update on what I'm thinking moving forward. As you know, I'm going to be holding some cash on the sidelines until the election's done, until the rate hike comes through to kind of see where the market's going. But beyond that, I'm going to continue adding to my portfolio here. Ideally, I'd like to get this up about 25,000 by early next year or so. And then again, I'm new, so I'm not really trying to get too involved, get too much funds wrapped up in the market before some of these big things happening this fall. So again, hope you enjoyed my video here. Subscribe always helps out the channel, helps me out quite a bit. Leave a thumbs up, give me a like, really appreciate that. I've been enjoying my time on YouTube so far, producing these videos. I've learned a ton about the market. Your input has been a large driver of a lot of these learning moments. So again, appreciate that, and we'll catch you next video.